A very good morning to all our viewers. Welcome to Morning Trade with me, StacyPereira. Well, seems like we have a lot to move in for today, a lot to navigate you through the day, and also all the sectoral as well as stock ideas that we have for you. That's what we're going to be keeping a track on, and also going to see how the day really pans out. Now, we do have macro data that has come in, but we are also going to be looking at an important counter that is going to be looked out for, which is the Fed's decision, which is going to come in today. So without any wasting more time, let's look at what the headlines and what the global cues have for us today. Wall Street rally continues. The S&P 500 and Nasdaq notch 13-month high as US inflation comes in at everyone's anticipation. The inflation print bolsters hopes of the Fed skipping a hike when it announces its policy decision later tonight. A CNBC survey shows that majority of the market participants expect status quo. The street also expects the Fed to hold fire at least until November this year. And markets in Asia Pacific trade largely higher on bullish cues from Wall Street. The SGX Nifty too is indicating a higher start for the Indian markets. And oil bounces back with Brent crude rising about to $74 per barrel on hopes of a higher demand as the Chinese central bank cuts lending rates for the first time in 10 months. The OPEC too maintains its demand forecast for 2023, rising expectations that China, but not more oil. So like I said, lots to be looking out for, but it's mostly all of those global cues that are going to change how the market really, market participants, they are anticipating and what they're going to get out of it. Now, the big data point, of course, is that moved global markets overnight was that inflation print in the United States, which has eased to a 2-year low for the month of May. Now, inflation has dropped to about 4% thanks to energy and food prices cooling off. But core inflation, which excludes energy and food prices, that remains stubborn at 5.3%, indicating that pricing pressures not fully eased. Now, amidst this backdrop, we also have the US Federal Reserve Open Market Committee, or FOMC, which kicked off yesterday, last evening. And according to a CNBC survey, it shows that 91% of the market participants are expecting a status quo. Now, majority also expect that the Fed will hold fire at least till November. But the outcome of this June meeting is what will definitely have a bearing, and that is what we're going to get to know at 11:30 p.m. tonight, and which is perhaps going to sway markets world over. Let's get a sense of how much this is going to change for the Indian markets. Let me bring in Anil Rego, the founder and CEO. Okay, before we get to Anil, I do have Shivangi Sarda with me. Shivangi, thank you so much for giving us your time and speaking to Moneycontrol this morning. Well, we do have a couple of macro factors to be looking out for, but how much of that does have a bearing on Indian markets, and how much could that sway? Because we're seeing a good rally so far, a couple of hiccups here and there, or consolidation you may call it. But what are we looking at for the Indian markets?
Good morning. Thank you for having me on the show. So we've seen that, even after the hiccups, we've seen that support-based buying is very much intact and very strong. And any declines were utilized by the bulls. And yesterday's closing clearly established, a very good upside over here. So we do, recommend a buy over here at any small declines for a target near its lifetime high levels, which is 18,887 zones, with a stop near 18,636. Now, the overall market, if we see, is quite positive. The FII's long-short ratio have also improved. There has been continuous buying on the cash side as well. Even the mid caps and the heavyweights both are participating in this rally. So overall, it looks quite positive and should continue for the upside. We've seen a lot of participation from the important heavyweights as well. So overall a buy stance over here. Even in Bank Nifty, we saw some sort of underperformance from the last three sessions, but overall it has given a quite strong closing yesterday. So this yesterday's short covering move and additional longs over here would help the index to move higher towards 44,250 and then 44,500 zones with a stop near 43,750 levels.
Right. Shivangi, you did mention the mid cap and small cap, and we've seen those broader indices really, outperform the benchmarks, you could say so, but also moving in tandem. So is this a good time to be looking at those, the mid cap, small cap, and also which specific stocks or sector within them would you suggest?
Absolutely, it's a very good time to invest because the best time was yesterday, and the next best time is today. So of course, some of the mid caps names are looking quite nice, and today we even have the Fed policy outcome, which is going to impact a lot of interest rate and banking stocks. This will also in turn have an impact on the some of the real estate counters. So on my radar, first is DLF. We've seen that this stock has given a breakout on daily frame, and a long consolidation has been completed before the stock has come out. So a very good setup over here. Even on the weekly basis, we've seen that the base has gradually shifted higher. So this calls for an upside over here with a target near 520 levels and a stop near 495. Now, coming on to the mid cap space, I'm liking Prestige over here. This stock has given a weekly, breakout over here from its crucial pattern. So this stock is looking quite positive. Even on the daily frame, it is holding on to its 50 exponential moving average and has, continuously moved from the last 10 sessions. Higher lows over here would suggest that any small declines are being utilized and converted into buying opportunity. So recommending a buy here and with a target near 600 zones and a stop near 560 levels. The third stock which I'm liking is Brigade. As I mentioned, the entire space is looking quite positive, and here we've seen that after a slight correction, we've seen a bounce back over here, and this stock is now ready to soar higher with excellent volumes in the previous session. We've seen that this stock has continuously outperformed from the last 3 months as well. So recommending a buy here with the target near 600 levels and a stop near 565.
Right, Shivani, you have two real estate stocks here. So we'll talk about, the rate sensitives and how much these other global cues are going to have an bearing on it. But stay on with us. Let me also talk about Indigo, because we have Goldman Sachs that has come out with a buy rating with a target of 2,730 per share. And that is something that is going to be quite interesting to watch, because we have been hearing a lot of news on Indigo. In fact, there were talks of the Gangwal family wanting to offload some of more of their shares. So that is going to be an interesting counter, and that has been a buzz for a while now. So well, they are saying that the strong traffic, you also have the higher market share that it commands, Indigo, and also the lower fuel prices. That is what is going to drive that RAC-CAX, what you call the cost of available seat per kilometers. That is going to be an interesting yield. You also have that's going to normalize. You also have that Q1 surge that we saw in ticket fares, which was due to that sudden grounding of Go Air, and that is really what is going to play out going forward, which is they're going to be improving their market share as such. So Indigo is going to be one counter that is interesting. Let me bring Shivani back in and ask her what is her take for Indigo. Is it right time? We've seen aviation stocks, have some bit of trouble all this while. How does Interglobe Aviation look now at this point?
Absolutely. So Indigo, we've seen that there has been a lot of momentum in this stock as well, and a lot of buying interest. We've seen that this stock has rallied from the last 3 to 4 months, and now we can see some sort of correction of profit booking, which I would rephrase it. So we could look at this stock at certain declines over here, say about at near 2000 levels, 2300 levels, and that could be a good buying opportunity again for this stock to again rally up to 2400 levels.
Right. So Indigo is going to see flying high, we could say for now. But another stock that is going to be in focus is that of KEC International, which has bagged orders worth 1,373 crores. Now, this is quite big, and the deals are including businesses across America as well as India. And they are looking at the transmission as well as distribution business mainly. This will also be looking into the signaling and telecommunication business for automatic block signaling or ABS systems as we know it, as well as the overhead electrification or OEH and the associated works for speed upgradation. So that is going to be a counter that is going to be a buzz in trade today. So let's also now look at a couple of queries that are coming in, and let's get Shivangi to answer that. We have people asking in for their view on LTI or LTIM now that it is called. Shivani, mid-cap or IT stocks, is that a place to be looking at right now, or somebody should stay away at least till we have this Fed decision out of the way? How would you be viewing it?
So all the mid-cap IT stocks have, shown a lot of interest and very good rally. In fact, if we talk about Emphasis or if we talk about, even KPIT Tech for that matter, even LTIM is showing a good rebounds from its 50 exponential moving average. So definitely the stock is looking quite positive, but we could look at, some, weight over here. Maybe we could add it tomorrow after the outcome. So we could look at a target here of around 5,150 levels and a stop near 4,850 levels.
Right. Okay. We'll also look at this other stock that has been a buzz, that of Zydus Life. Now, the CGMP inspection by the US FDA on their injectable manufacturing facility was concluded with nil observations, and the group's injectable manufacturing facility, which is called Zydus Biotech Park in Chandigarh in Ahmedabad, that's the one that underwent that US FDA inspection that happened over 5th of June to 13th. And when we say CGMP, we are talking about the current good manufacturing practice, and this is the inspection that concluded with the observations coming out as nil. Now, the company has also been a buzz because it got a couple of US FDA approvals as well in this past few days for different kind of drugs. Just yesterday, it got the final nod for its diclofenac, which is an anti-inflammatory drug. So that is going to be a counter that is a buzz, like you can see on your screens, quite positive in trade yesterday as well. Is that likely to continue? We're going to have to wait and see. But we also have a lot of pharma, action in that pharma space that we've been talking about. Now, another stock that we are going to see in focus today is going to be of Anupam Rasayan. Now, this is because they've gone ahead and signed a letter of intent for revenue worth of 2,186 crores. This with a Japanese specialty chemical company. Now, Anupam Rasayan it's known for the custom synthesis as well as a specialty chemical company, which has gone ahead to sign this $265 million. If you convert that to rupees, it's 2,186 crores, and this will be for the next 5 years with this Japanese company. Now, what they plan to do, they will supply new age patented life science active ingredients to this Japanese counterpart, and the product will be in validation phase for the first 18 months or so is what we're given to understand, and upon the successful validation, that supply will commence from the calendar year of 2025. So the products will be manufactured in their existing multi-purpose manufacturing facility, but that is going to be an interesting counter. Anupam Rasayan at this point getting that huge order that we've seen. Let me bring in Shivani once again. Let's take in a few more queries from our viewers. A lot of interest in Inox Wind. Now, we definitely had some news coming in, the merger that has happened Shivani, how should one be looking at this, especially at the current price? Also, which one would benefit in that whole share swap that is going to happen?
So we've seen that, this stock has seen some sort of a consolidation over here, and I believe we could wait and watch for this stock because I feel that the momentum has lost. It could not hold at higher levels and it could not surpass its previous resistance zones as well. So we could wait and watch. I feel there are better sectors and stocks which one could look at.
Right. Another query coming in. Let's take that up. Rupak Mehta is asking us to discuss on Kelton Tech. He's entered the market in 2021 when it was at 69.75. He's asking what are the medium and long-term prospects and should one stay invested or cut their losses now? What's your take?
I believe this stock has, faced a lot of momentum on the downside, and I believe we could exit this stock and move into better sectors.
Right. So that is the word. That's the advice for Kelton Tech, at least. I hope that answered you. But another stock that we will focus on is Kotak Mahindra Bank. And yesterday it was among the top losers in trade. It saw some amount of selling pressure. But today we're given to understand the bank is considering raising funds and the board is going to meet on June 16th. Now, Kotak Mahindra Bank, it is a private lender and has said that the directors will meet on June 16th to consider raising of funds. Now, this can be via the issuance of unsecured, redeemable or non-convertible debentures as well as bonds. This could be in one or more tranches or in a series of private placement basis and during the course of FY24. So that is what will put this counter back in focus. Kotak Mahindra Bank, yeah, you can see on your screens, down about 1.25% yesterday, but definitely now that there are talks of raising funds, it is something that is going to keep participants interested in what's happening. Let's also take another query. Krish is asking, let's get Shivani back to take this and put the focus on Aditya Fashion. A lot is happening on that front as well, right? Like from the AB group, them entering jewelry, that has been in focus in the past few days. But how should one be looking at AB Fashion retail?
Yes, absolutely. So this space is looking quite positive. Even if we look at ABFRL or trend, these stocks have, done really well. And ABFRL specifically, it's, turning from its crucial support zones. So definitely one can add for a target near 220 levels and a stop near 205.
Right. So that will be interesting to watch out for, and quite a few counters that we can be looking at this evening. Shivani, any picks from you, any sectors or picks that you would personally want to look at, especially at this point in the market?
Yes, I already mentioned about the real estate stocks and, because of the rate sensitive movement that we do expect. So we talked about DLF and even Brigade, and also on the mid cap space, I'm also liking Prestige. So these three stocks are looking quite positive. Apart from that, some of the auto counters, the EV, in the EV space, I'm liking Electra and JBM Auto. So these stocks could also be, looked into for focus. Now, some of the heavyweights have also participated in this rally, among which I'm liking ITC at these levels again, because we've seen that after a certain, consolidation and a cool off, the stock is again getting ready for a good up move. So these stocks could be in focus for a good up move.
Right. Well, thanks so much, Shivani, for that. Shivangi Sarda of Motilal Oswal giving us her picks and counters of what we can be looking out in trade today. But like we were talking about, the macro cues, that's the one that's going to have quite a bit of impact in the trading day. And one of those big data points was the United States CPI number, which is eased to a 2-year low, and that inflation number coming in at 4%. So that definitely is going to be interesting to watch out for, because what has happened is their core inflation that continues to be stubborn at 5.3%, indicating that pricing pressure is not fully eased. But this will also give the Fed some bit of relief, you could say, and also push him in that direction. Whether it's going to be a hawkish stance or a dovish one, that is what one is going to wait out for Chairman Powell's comments. Now, that is going to be interesting and also have an impact on the Indian markets or global markets. We've already seen oil prices that have swayed in this whole time, just 2 days back down 4%, then trying to pare its losses, and it's back now. So let's decipher all of this. Let me bring on board Anil Rego, the founder and CEO at Right Horizon. Thank you so much, Anil, for speaking with us this morning. Let's decipher how these macro cues are really going to turn out for our markets. We've been seeing a good rally, you could say, so some bit of consolidation as well, but everyone's saying it is only upward from here. Is that your feeling as well? Is this all these macro cues really helping even Indian markets?
Yeah, definitely. I think one of the key reasons why sort of we went down and global markets also went down was, the inflation, which triggered off, rate hikes and a very hawkish stance, by all the central banks globally, right? So that was sort of the key driver for it. So yes, I think that factor is definitely easing, and I think a leading indicator for us will be looking at inflation, and inflation has definitely come off. The second part is also to look at yields. Okay, so yields have, the good part is yields, ended up remaining flat, went up and down in smaller ways. But over the calendar year, we didn't see any hike, in yields, even though central banks, were aggressive in beginning part of the first 3 months of the year. So that's a good part. So inflation definitely coming down. I do think everybody is waiting, to see what the Fed does. Will they pause? Yes, I think at least with data coming on inflation and it easing, I think at least warrants a pause. So that's something, and wait and watch and see if something doesn't turn down further, then maybe I think Fed will come back with increases. But at this point of time, I hope and I think that they will also sort of keep it flat. So that coming back to India as well, we are seeing inflation sort of come down. We've seen pause in interest rates. So we have already done it in the short term. So there as well, we don't see any concerns there. So there is a lot of positivity. Yes, I think that hopefully will give a little bit of confidence for FIs as well. And some of the continued movement investments that have come. In fact, suddenly we are seeing a lot of positive reports from the large global institutions, and Morgan Stanley, for example, has spoken of India. The decade is of India. So there is a lot of positivity, both in terms of sentiment, as well as if you look at from a fundamental basis. I think cooling off of interest rates, or at least remaining flat for some time. I don't expect it to go down in a hurry, but at least it is the first phase of a pause before any further set of down happens. So I think broadly things are good. The monsoon is something that we'll all be watching for. Hopefully, it will not be deficient. We're probably it should not be excessed as well. So that is something which will impact a little bit. But I think given profit growth had come down to sort of lows, profitability, profit as a percent to GDP, for example, is numbers that had come to lows, and I think now it will be in a longer term upward curve. So a lot of things I think are working for us, and one believes that this momentum will continue, and we also think that it will continue for a slightly longer period of time.
Right. So the momentum, of course, will continue. Yeah, we are seeing that kind of trajectory, and these macro counters definitely, giving that boost as well. But if you look at the headwinds, what are those possible headwinds that could come? We do have the El Nino, which has, they have declared that it is an El Nino year. So that is going to have a definitely, different kind of impact when it comes to India and the monsoons here, and how that is going to have a bearing on, be it auto stocks or FMCG, all of that. It is a chain, you could say so. So how should one be cautious about this fact, or it's just something that we'll take in our stride?
Yeah, so definitely one of the things I pointed out was, monsoon, right? So, yes, El Nino is there this year, so we need to see how, it sort of impacts. But at the same time, I think we have become less and less dependent, say, on, agriculture. And if you look at the usage of groundwater and stuff like that has sort of been a lot better. Of course, there's depletion, and that's a longer term issue that one has. But I think in the shorter term, I don't expect such a great impact unless it's a severe condition, right? So I think if it is, at least as we stand today, I'm not seeing any noises around it being a severe condition. But so I believe that unless there's further data to show that the conditions are really deteriorating, I think we can assume that the trajectory will continue.
And Anil, also let me get a word on crude. Now we've seen those prices oscillate between $72 per barrel, now back again to 74. What does this mean for India? Because this is the rise has happened now after China's central bank lowered that short-term lending rate for the first 10 months. So would a rate hike now from the Fed propel crude prices further? Strengthening dollar is also something that is worrisome for India.
Yeah, first of all, I think we'll have to see what Fed does, and we don't know what they're going to do. But in terms of crude, yes, it has been relatively volatile, but say with a sort of a softer bias, right? So which has been good. I think $2.70 to 74, etc., doesn't make so much of a difference. I think the issues come when, say, that goes to 90. So those are when the impacts really come. At times, it's good to have, rising crude prices, and because what it means is there's demand coming back, right? And the global economies are doing well. So in that first period, that initial period, you'll actually find that markets and crude prices, both go up together, right? So it's not a negative. Where it impacts is when it crosses certain barriers and inflation goes above a certain level at an overall, then it's when the impacts start. So I'm not seeing that right now. I think first it will be a positive sign if crude is rising on a slow basis, and which also means that the global economy is healthy.
Right. Anil, your last word on what sectors or stocks that people should be looking at, or if somebody is looking to enter the market now, would this be a good time according to you?
Yes, the sectors definitely one thinks that rate sensitives, thanks to the inflation trends, etc., is something that one can look at. You can look at both NBFCs as well as, in fact, right now, probably smaller banks also will do well, PSU banks. So those are sectors which sort of one can look at. We have been bullish on, say, building materials sectors for some time now. Also, some of the consumer areas, I think, will also sort of do well, and that sort of trajectory will sort of continue. For somebody who's entering now, I still think, everybody is saying that, we're at a high. But the context is that, this is almost like 20 months back also we were at the same high, right? So if you look at it the other way, we were where we were. So from that standpoint, in these 20 months, actually, we've seen earnings growth pretty strong, and so in fact, probably markets have come down and are at a discount from where they were, say, almost like 2 years back. So from that standpoint, yes, for somebody to enter, it's a good thing to look at. Maybe be diversified, invest in phases. Don't run after momentum. Try and go into seeing, what is the company doing fundamentally, and then invest.
Right. Well, Anil, we'll have to leave it at that word. Maybe a good time to enter, but check for all of what really works out best for you. Well, with that, thank you so much, Anil Rego, CEO and founder of Right Horizons there. But that seems like we're completely out of time on this edition of Morning Trade. Thanks so much for tuning in. Up next, we have for you Opening Bell.